please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the government tabled a bill to replace the ordinance that amended the insolvency and bankruptcy code in the Lok Sabha. Remember, earlier this month, President Rajnish gave his assent to the ordinance which makes it tougher for willful defaulters to bid for their companies during the insolvency process. There are, however, some changes in the tabled bill. Latha Venkatesh spoke to the head of SBI, Rajnish Kumar, the MD of JSW Steel, Seshagiri Rao, and Rasheh Shah of Edelweiss to find out how they read the bill and the changes proposed by the government.
When we are looking at resolution, the credibility of the resolution plan and credibility of the promoters or the bidders. So that has to be a key consideration apart from the technicalities and legal.
Mr. Rao, did you see the new bill and the bankruptcy amendment bill as against the ordinance? Are there any material differences?
I have glanced through the just one page which has come by WhatsApp. I have not gone through carefully.
Okay.
But whatever I read, I am finding more of a clarificatory nature than changing the spirit of the amendment which has been done earlier.
Okay. And one more question I had for you. There were people who raised the doubt that if even one of the group companies are an NPA, classified NPA, then that group may not be able to apply as a resolution applicant. Could you get any legal vetting on this, Mr. Rao?
No, it is a very generic statement saying that if any company becomes an NPA in any group, all the resolution applicants of that particular group get disqualified. So we have to see from the definitions that have been given in the IBC and also Companies Act and the SEBI. All these three together we have to test who is the resolution applicant, who are its promoters, who are the connected persons. And whether this disqualification is applicable for those entities coming under these definitions as given under various acts.
Okay.
So it is a very generic statement to say that any company becoming NPA in any group, then entire group get disqualified. I don't agree with that interpretation.
Okay. Rasheh, the same question to you. What have your legal eagles told you about the disqualifications for those who can apply as a resolution applicant? Will this NPA issue can it be put to rest already, or do you think it will pose a problem?
I think the way it has been drafted, it is still a grey area, and I'm expecting that a few NCLT pronouncements on this will clarify the air, because I think eventually there are group companies which are more integrated, there are group companies which are not very integrated. So I do believe that this will, and it has been deliberately kept a grey area because you cannot be too overly specific. So in the end, it is going to be case to case on who is allowed to be a resolution applicant and who is not as per the ordinance. I think the spirit is that somebody who has not has good credit standing, has not got good credit performance in the past, should not be eligible to bid, because you only want people who bid have got good credit standing in the past.
Yeah.
So I think that is the spirit. It will get tested. I don't think it is as clear cut as all of us are hoping for it to be.
Okay. Well, in that case, Rasheh, are you saying that the NCLT, the NCLT has respected the spirit of the IBC beautifully until now? Do you think that will continue and therefore all credible applicants will be allowed, or do you think this is still something that has to be tested?
I think the spirit is all credible applicants should be allowed, and eventually it will also be a case of what are the other alternatives, because let us say if there is only one applicant and if the only other alternative is closing down of the company or the liquidation of the company, I do think that because the entire NCLT, the entire Insolvency Bankruptcy Code has been drafted keeping in mind revival and restructuring of the existing assets, not liquidation of the assets. Liquidation is the final option when everything else fails. So I think even that will play a role in terms of how the insolvency professional, the committee of creditors, and then the NCLT views the credibility of the applicants who come up with a resolution plan.
All right, let's turn the clock back. 2017 has been a tough year for Infosys. It has been at the forefront of a lot of controversy dealing with alleged lapses in corporate governance, discord between the founders and the management, an exit of the top boss, and a subsequent revamp of almost the entire top rung of executives. How has it been for the IT bellwether? Well, CNBC-TV18's Rukmini Rao and Kritika Saxena recount all the events that make Infosys our next newsmaker of the year.
2017 began with one of the biggest corporate clashes India Inc. has ever seen. Once the country's poster boy for technology and innovation, Infosys was embroiled in a bitter battle between its promoters and its management and board. The discord first came to light in February.
The founders have raised concerns on governance.
The main bone of contention, as CNBC-TV18 reported, was that the board had not followed protocol when it came to deciding on the severance package offered to former CFO Rajiv Bansal, the acquisition of digital firm Panaya, and in the fixing of CEO Vishal Sikka's compensation. Founder N.R. Narayana Murthy, who raised these questions, alleged that in these matters, Infosys had not met its standards of corporate governance.
See, in Kannada there is a saying, if you sit under a toddy tree and drink milk, people will think you are drinking toddy. So therefore, it's very, very important for us not only to do the right thing, but also to be seen doing the right thing.
This led to a rebuttal by the Infosys management through a 4-hour-long press conference.
I think Mr. Murthy mentioned that there is a proverb that if you drink milk under a toddy tree, you'd still be, a palm tree, you'd still be mistaken for drinking toddy. And that's very correct. The founders have made observations, they've given their comments, and I respect these comments.
They do take our attention away from the business, and you know, when this kind of a interest is there and you see the name splattered everywhere and so forth, it does take your attention away to those things, but it is our responsibility, our duty to not let that affect us.
Things seemed to settle down after that, but the trust deficit reared its head again in July when Murthy spoke to CNBC-TV18.
Biggest regret across the board, personal, professional?
Well, you know, a lot of my founder colleagues told me not to leave Infosys in 2014, to stay a few years. Generally, I find that I am a very emotional person. A lot of my decisions are based on idealism, all of that. And probably I should have listened to them.
This opened up the proverbial Pandora's box all over again.
The company responded with numerous clarifications and external agency validations, but however, all this ended abruptly and spectacularly in August.
Just days before Narayana Murthy was scheduled to address Infy's investors in a conference call to reiterate his allegations against the board, CEO Vishal Sikka resigned.
It was difficult to deal with was the sort of the continuous, allegations and continuous noise around the same thing. It is an untenable situation, and I don't want to do this anymore.
And soon after, Rasheh Shah stepped down as chairman of the board. This paved the way for Nandan Nilekani, one of Infosys' founders, who was also CEO between 2002 and 2007, to return to the company as chairman, and he had a clear agenda.
My goal is to build consensus, bring stability, and take this company forward on its rightful journey.
Nilekani did not waste time. Salil Parekh, who has been steering Capgemini India for the last many years, has been named MD and CEO and will take the reins on the 2nd of January. But what happens next will unfold in 2018. With Rukmini Rao in Bengaluru, in Mumbai, Kritika Saxena.
Let's get a quick handle on what's taking place in the Asian markets. Remember, there are thin volumes in today's trading session. We're getting early rates from both Shanghai as well as Hang Seng. Hang Seng absolutely flat, no changes there. The Shanghai markets opening up with a gain of 0.25%. No further movement in the Nikkei, which was up about 0.18%. Now it's up 0.16%. No real change as far as the Taiwanese index is concerned as well. Opened with a pop, though the Straits Times has moved into the red. The SGX Nifty still unchanged with a cut of 10 points at the open. But that's as far as today is concerned. 2017 has been a stellar year for equities in the world as well as India. Nigel, our man in black, is here. Nigel, you seem to be dressed for the party, but the Bulls, they had a party this year, right?
Absolutely, Mangalam. What a party it has been for the Bulls. In fact, I'm dressed for the party, but the real party was enjoyed by the Bulls. You know, as this picture tells you, they were enjoying the champagne all through the year, while the Bears, the only time they got to sniff some bit of money is when, in fact, the farmer stocks fell. So it appears that the bear was consuming some kind of medicine all through the year. But let's run you through first what went on in the globe. Well, the mother market, that's the US markets, that put on good gains in the last 1 year, ending with gains. I mean, it's holding with gains of around 30 to around 40%. European markets as well did quite well. Remember, the UK market, there's a relative outperformer sitting with a gain of around 20%. And from the emerging market basket, we did quite well, because the Russian index, that gave you a return of closer around 50% approximately. India's in there with a gain of roughly around 28, 29%, very, very approximately. You know, we've been tracking these markets for so long, and our own BSE listed market capitalization, if you just take a look at the total addition in lakh crores, I remember the time when, in fact, the BSE market capitalization of all listed companies was 40 to around 50 lakh crore. You know, in this year, we have added roughly around 40 lakh crores in terms of market capitalization. That's telling you the kind of run that we have had. Just keep in mind, in fact, if you just look at the graph and how we have moved at the end of the year, just take a look at that. You know, for a few years, we were stuck in that range of around that 7,000, 8,000 odd mark. This year, we took off. We're up at around that 10,477, very, very approximately. So in terms of addition, this year we have put on more than 2,200 points, very, very approximately. Just take a look at that. Good graph coming up for you. It's been a good year, and absolute gains, we have done very, very well. But let's move on then. The key indices, how did we fare? The Sensex is up roughly around 30%. In dollar terms, it's done even better. The mid-cap index, that's the place to be, as well as the small-cap index, 40 to around 60%. The best performing sectors, maybe real estate prices are not going up. It gives us some hope we can go out there and buy some property, or at least that small flat that we'd always dreamt of. But the real estate index, just take a look at that. More than doubling your money. The metal stocks were on fire as well. Production cuts have helped out with them. And even the auto space has been driving along. If you take a look at what's not done well, pharma, as I said, they were ill in the last 1 year. In fact, that index has pulled back considerably from the lows, still sitting with a cut of around 7%. But the big gainers from the Nifty itself, you know, you look at Bajaj Finance, that's given you a good amount of money. Tata Steel has given you money. Maruti, everyone thought maybe it's done its run. Well, it's done a good drive in this year as well. And a whole host of big stocks are up for you on the screen. Well, in terms of losers, Lupin in there with a cut of nearly around 40%. Sun Pharma as well is sitting with a cut of around 10%. But let's go to the broader markets where the real money is made. India Bulls Real Estate. Oh, there you've had a big run. JSPL, JP Associates, some of those high beta stocks did well. And Titan continues to generate money for a lot of retail as well as a lot of shareholders. Well, what didn't do well? Glenmark Pharma, it had to be from the pharma space. Not feeling too well with them. And you have a Janta Pharma as well in there with a bit of a cut. But the real big money, don't talk about making, you know, 50%, 100%. The real 5-10 baggers that you saw in the last 1 year. HEG, India Bulls Ventures, you had Graphite, all of them, Bansali Engineering. Just take a look at the big money that was made. V2 Retail as well has done very, very well. I'll tell you what, I'm dressed for the party, but the real party was in those stocks, and it's been a phenomenal year. The Bulls, they are saying cheers all the way. 2017 belonged to the Bulls. Back to you.
Thanks a lot for that, Nigel. 2017, yes, did belong to the Bulls. You're dressed for the party, but what is your poison for the weekend? Is it going to be the medicines, or is it going to be the champagne that you spoke about, which the Bulls had?
Putting that question to me?
Yep. Yes, that's for you. What's your drink? Is it going to be champagne, or is it going to be the medicine?
You know, Mangalam, we've been working together for the last 3 or 4 years, so I'm sure you know it's going to be, you know, some wine and cake, but let's hope it's a good new year. It's been a great 2017, and we're looking forward to the support of all the viewers in 2018 as well, Mangalam.
Well said, Nigel. Let's see what the poison is for you this weekend. But on to some big national news then. The Lok Sabha has passed a bill to criminalize the practice of instant triple talaq among Muslims. The bill was passed after a 7-hour-long fiery debate. Opposition members tabled many amendments to the bill, but they were all rejected. And in the end, the bill was passed through a voice vote. The bill proposes a 3-year jail term for the offender. Not just that, the offender will also be forced to provide compensation to the victim and her dependents. Lok Sabha saw an intense debate with the Congress party demanding that the bill be sent to a standing committee. Now, the next stop for the bill is the Rajya Sabha, where remember the government does not enjoy a majority.
All right, then, important decision being taken place in the parliament there. With that, we'll slip into a short break. Come back, we'll get you a check on the cues to watch from the futures and options space.
Well, Manisha Gupta now joins us with all the update from what is happening in the world of commodities. Manisha, good morning. Last day for trading in commodities as well. What are the cues?
Oh, well, quite positive, really, because you've seen everything holding on the higher side. Crude jumped back yesterday yet again after the U.S. inventory saw yet another week of decline. You have the refining capacities actually the highest since 1998. So that tells you that the U.S. is trying to churn as much, energy products as they can because of the strong demand in the global markets. Also, this is a winter season, so there are no chances that you will see a profit-taking or a huge profit-taking coming in right now. So we seem to be closing this year at around those 2.5-year highs. There are positive statements. The U.S. inventories have declined 11% in this year. And everywhere that you see in sense of demand, supply concerns is supportive for the crude oil prices. It's the same case for the metal space where you have the copper prices holding around those 4-year highs. In the Asian markets, it's yet another 0.5% of gain that you are trading with. Aluminum prices are trading near 5-year highs. It's yet another 1.5% of gain in the Asian market. So most of the metals actually have started on a stronger note as the US dollar continues to decline. There are supply concerns. The China data is strong. The pollution crackdown continues. Iron ore, steel, zinc, almost everything in metal space is trading firm. And so is the case with the precious metals, where you have the gold and silver prices also, especially gold now edging towards $1,300 per ounce, is a 1-month high as well. So last day of the year, and everything in commodities has opened on the green.
All right, everything in commodities in the green on the last day of this year. Thanks a lot, Manisha, for that. Looking forward to see you next year as well. But tell you what, everyone is talking about the last day of this year. In the futures and options space, we are in the next year already. Yeah. So wish all our viewers a very happy new year from the futures and options space. Say hello to January 2018. December, that's been really good. 251 points in the December series. And we start the new year, the new series, with the highest level at the start of the new series, Nifty 10,478 points thereabouts. Though need to be a little more cautious because the rollovers, they've been very high, 73% rollovers. That chart should come up for you. That compares with a 3-month average of close to 69%. So more conviction on the higher side. We are at record highs, and we're starting with a slightly heavy open interest as well. So 2.2 crore shares in open interest. That compares to about 1 crore, 1.9 crores as an average of the last few months. So that is something we need to watch out for. The FIIs, they've also gone with a lot of aplomb, 70% long exposure. Remember, they ended yesterday's contracts with just 55% long exposure. So a lot of the longs, they were rolled over to the next series. They have some long exposure in index calls as well. They have hedged themselves by 71% long in index puts. But that is something we need to watch out for, because January historically has been a go big or go home sort of month. The last 3 Jan series should come up for you. 510 points, 522 points, 500 points on either side. So let's see what happens. We're at 10,500. The markers are placed on 500 points of either side. The maximum open interest is at the 11,000 call and the 10,000 put. So 500 points on either side. Yesterday, the most active options were the 10,300 put and the 10,700 call. So that's as far as the near term is concerned. The good point is that it's go big or go home.
Okay, Mangalam, so go big or go home. January has, of course, started at the highest level for the Nifty with highest ever future open interest as well. That is what Nigel tells us. But with that, it's a wrap on the last edition of Power Breakfast for 2017. From Mangalam, myself and the team, thank you so much for watching. We leave you with the picks of our bullseye contestants this week.
My first pick is Bank of India. I sell it with a day target of 155 and a stop loss of 176. Second, L&D Finance. I sell it with a day target of 165 and a stop loss of 180. Third, Fortis Healthcare, I buy it with a day target of 180 and a stop loss of 152. Fourth, I continue with yesterday's Jindal Saw, I buy it with a day target of 144 and a stop loss of 128.
First one is buy call on DLF Limited with stop loss at 261, target price of 279. Second is long call on Hindustan Copper with stop loss at 99, target price of 109.50. Third is long call on Intense Technology Limited with stop loss at 118, target price of 132. Fourth and final is long call on JP Associates with stop loss at 22.50, target price of 25.50.
My first call today is a buy call in Dish TV with stop loss below 79.5 for target of 85. My second pick is a buy call in Just Diet with stop loss below 512 for target of 560. My third call is a buy call in CG Power with stop loss below 89.5 for target of 97. And my last call is a buy call in Deepak Fertilizers with stop loss below 407 for target of 452.